I do want to bring in my guest, Joy Yang. She's head of product management at MarketVector Indexes. Joy, it's great to have you on the show.
Thank you, Kristen.
We were hearing some remarks from Treasury Secretary Scott Bessent earlier this hour, of course, talking about trade progress, if you will, with 17 of the 18 key partners that the U.S. has identified on trade. A lot of these trade headlines have been moving the market. Yet earnings season is underway and the economic data is on tap. So maybe we should start with earnings, at least for now. Joy, how are you anticipating that companies navigate this environment that is dynamic with trade?
Yeah, so this is going to be an interesting week for earnings season, and we're already seeing that companies are either not giving guidance, or those who are, it's not clear how investors should react because it's not clear what we're going to receive in headlines the next hour. I know we'll be watching Jim Cramer, but I think right now it's all entertainment for us right now, because I think, first of all, investors have to step back and get some perspective, right? So, and I think that's critically important. One, understand how markets work, and markets are risky. So that means drawdowns can be followed by sharp, rebounds. So if you're out of the market, you have to know when to get back in. And if you're short the market, you better have some liquidity pool to cover your margins, right? So we know empirically investors are just bad at market timing. So I think it's important to stay invested, and it's important to understand that, right now we're seeing sharp outflows from U.S. exceptionalism, but, foreign investors are still large holders of U.S. equities, bonds, and cash because there's really no alternatives. And I think maybe the perspective is, why did nobody question when we had these huge inflows into 7 companies or, huge inflows into returns that were, 20% back to back. So those were the outliers, and I think investors need to now be grounded in thinking about what does it mean to have kind of this healthy and necessary pullback in the markets and how we view American exceptionalism.
Yeah, I think that's a great point, right? Because many people would say one correction a year is healthy, right? A 10% pullback, and right now at the S&P we are at that 10% threshold. Obviously there was peak fear when we had witnessed a 20% drop in the major indexes. But in terms of this environment, do you think this is a buy the dip opportunity?
I think it's a diversification opportunity.
Yeah.
If you can't sleep at night, you really have to be honest about your risk tolerance.
Yeah.
And you have to think about what are your liquidity needs if you can't hold out for the long term or until we get clarity. So good diversification asset class is still gold. It looks expensive, but it's still diversifying against all the other asset classes. And one thing we have to remember is gold is still a real world asset. So it's subject to custody, tariffs, supply chain, kind of transportation issues. So you can also think about Bitcoin as an alternative asset class, not your core asset class, but something that is diversifying across your other, risk down.
It is interesting. I do want to take a look at Bitcoin as we speak, Joy, because that has been on a tear, really, let's say, since the Easter holiday, at just under 95,000. There's a great chart that we have that does show the current price of Bitcoin, and that has been on a tear. Also, as gold has been on a record run. We've seen some decoupling of cryptocurrency from technology since about that, Easter holiday, and amid concerns about the economy. So how should a viewer, a potential trader, investor look and think about how the price of Bitcoin moves and the price of gold?
So there's no doubt this is a volatile asset class, but so are equities, so is Palantir. But the one thing is when you think about the fundamental use case of Bitcoin, it's still a store value. So the volatility will attract speculative investors, but the store value will attract long-term holders. And we saw that with institutional buyers coming in, with regulation clarity around the asset class. So it has this changing nature because, it has different investors in the asset class. And I think one thing that we're seeing now is the strength of Bitcoin, which is it's immutable. It's not tied to any government. And more importantly, it has trust built into the code. So it doesn't depend on trust or confidence in it.
So in terms of the best way to be moving forward, you talked about Bitcoin, you talked about gold. Any other sectors that are on your radar?
I think it's still important to think about structural shifts. So AI is a real story. It will produce innovation, productivity, but it will shift from semiconductors, potentially to software or quantum computing. And so always think about where are people investing. And we saw Google hasn't stopped investing in AI infrastructure, but also, look at companies like Palantir, which is, based on AI software, but because we're seeing this government stimulus, governments are investing into AI, and that lifts up the whole defense sector.
Yeah. Joy Yang, she's head of product management at MarketVector Indexes. Joy, thanks so much.
Thank you.
Thanks.